73.79% of Billionaire Bill Ackman's portfolio is in these four stocks: Lowe's, Chipotle, QSR, and Hilton Holdings. So these are, interesting in that three out of the four really speaks to the reopening trade. This theory that consumers are spending a lot more of their money on things that were not popular during the pandemic, when we were in lockdowns, when we were spending more time at home. And now that economies have gained momentum in reopening, we're spending a lot more of our money and our time on things like going to restaurants, on traveling, on eating out, on concerts and things like that, like going away from home. Like three out of the four stocks really speaks to that. And then he's got Lowe's in the portfolio with 23.55% of his portfolio in Lowe's stock. This is one that I was a little curious about because it doesn't really fit in with the theme of this reopening trade, this momentum trade of where consumers are spending more of their money and time. Although I will say that Lowe's has done an excellent job managing the business both during and after the pandemic, which very few businesses I will say have been able to do. So I often give kudos to Lowe's and Home Depot for doing an excellent job managing the pandemic. Many other companies that experienced a huge boom during the pandemic didn't really manage their business very well. I can highlight two very popular ones, Peloton and Amazon, which kind of overinvested in their business during the pandemic when things were booming. They thought that this would persist, and so they spent billions. In Amazon's case, they spent billions more than they should have during the pandemic, and now they're suffering the consequences of that. Lowe's did not do that. Right? They managed the boom in customer demand during the pandemic without over-investing in the business and without having significant amounts of shortages and out of stock and disappointed customers, right? They were able to fulfill that boom in customer demand and at the same time not have a hangover after the pandemic of too much investment to fulfill that customer demand. So really good, precise investment in expanding the capacity to meet that customer demand and moderately decreasing it now as customer demand has shifted, which is a difficult thing to do, not easy to do. Those of you who've got big business that experienced these kinds of fluctuations during the pandemic are well aware that it wasn't easy to deal with the boom and bust cycle. And many CEOs of public companies are on the record saying that this isn't easy to do. We're giving ourselves a wide margin of error. And so that could be one reason why Bill Ackman has chosen to be in Lowe's here. And let's go, let me show you a little bit. Let's go a little bit deeper. Let's look at the valuations, and looking at the first two, Lowe's and Chipotle. You see here that Lowe's, looking at a forward PE basis, is a relative bargain, trading at a forward PE of 14.78. This is lower than the market forward PE, which is roughly around 17, 18, 19 maybe after today's rally. And so that's another reason that Bill Ackman could be in the stock, is because of its relative bargain valuation and the excellent progress the company has been making. Operating profit margin has been expanding steadily over the last decade, looking back longer term beyond the pandemic. And then in addition to that, they've been increasing revenue and protecting themselves against encroachment into its business from Amazon, from its main rival Home Depot. So all in all, just an excellently performing company and relatively bargain valuation. So I can understand why Bill Ackman is attracted to this stock. And I spent a lot more time on this first one because it had the highest weight in Bill Ackman's portfolio. So I wanted to spend a little bit more time on this stock. And so I'll move forward, but I won't spend as much time on the others. The next one I'll talk about is Chipotle, trading at a forward PE of 37.88. It's, I believe, the most expensive of the stocks in the top four that I'm going to discuss here. And like Lowe's, Chipotle was another company that did extremely well in managing the business during the pandemic. Relatively new CEO Brian Nicole, who's been there, I would say about four years, I think, coming over from Taco Bell, I believe, has done an excellent job in managing the business, in forecasting, telling investors transparently what he plans to do, the pace of store growth, the pace of sales increases, and setting targets and hitting these targets, and then setting higher goals and hitting those goals. And so the market has really liked what Chipotle has done and is really excited about the prospects that Chipotle has laid forward. Right now, they have about 3,000 restaurants open, and the new CEO, Brian Nicole, has said that there is room for Chipotle to grow to 6,000 restaurants longer term. So more than doubling the base of locations, so restaurant growth. So nice long-term growth projections for the number of restaurants. But in addition to the growth in the number of restaurants, the CEO also expects that the sales per restaurant to increase from 2.5 million to 3 million. And management has earned credibility because they previously set a target to reach 2.5 million in restaurant sales, which they recently hit that target. So they hit that 2.5 million restaurant sales per restaurant target, and they increased that target. So earning a lot of credibility from investors, including Bill Ackman, and you can understand why Bill Ackman is attracted to this stock with very good growth prospects longer term. And moving on to QSR, Restaurant Brands International, again sticking with this trade of consumers spending more of their money going out, dining inside restaurants, something that was significantly restricted during the pandemic. You couldn't go out to eat, and so when it reopened now, consumers are unleashing this pent-up demand just to get out of the house, to go be around people, to be outside of their home, eat somewhere else. And so this is creating a boom in demand for these places, and QSR, like Chipotle, has benefited from this, trading at a forward PE ratio of 21.57, so not significantly more expensive than the market. I mentioned earlier the market is at a forward PE of about 18, 19, and so you're paying a little bit of a premium for this company that's experiencing a significant boom in consumer demand, which is persisting well into 20. It persisted well into 2022 and is continuing into 2023. Similarly, Hilton Worldwide Holdings continues on that theme, trading at a forward PE of 25.6. And an interesting note about travel is during the pandemic year 2020, travel spending worldwide crashed from 1.5 trillion in spending on hotels and resorts. That crashed to 610 billion in 2020. That rebounded to 910 billion in 2021 and a little over 1 trillion in 2022. So a big rebound in 2021, a smaller increase in 2022, and I suspect a continued smaller increases in 2023, 2024. So it's taking its increase, the travel demand spending is increasing like a light dimmer rather than a quick switch to recovering to that 1.5 trillion in spending like it was before the pandemic, right? So we're at 1.1 trillion, at least that was the estimate for 2022. The official figure hasn't came out yet. 2023 is likely to be higher than 2022, and I suspect that to continue to increase to go well above the pre-pandemic level of 1.5 trillion because the price level has increased. If you look at ADRs, which is the average daily rate that people pay for hotels and resorts, that's significantly higher than it was before the pandemic. So even if people are traveling the same amount that they do before the pandemic, overall spending is going to increase because prices have increased. And so you can see Bill Ackman is riding that tailwind that's going to persist throughout that year. So there you have it. 73.79 of billionaire Bill Ackman's portfolio is in these 4 stocks, and we've kind of gone through why he likes each of these stocks. So I hope you've enjoyed this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.